What's up, guys? JJ Fade 23. I'm going to make a quick video, KTTA, from my buddy Francis over here. All right, let me delete all this crap. So, guys, what do we know before the market opens? We only can do what we can do. We look at the gap stats, we look at this, we look at that, whatever. So the stock is way down here, right? We have a pivot right here, but it's not that much range, right? So we know the range is like, nah. But the stock does have a history of making paint stripes, gap up, paint stripe, but so we have a multi-touch pivot here. Above that, we have another pivot here, okay, 338, and then we have the most clear recent pivot besides this one right here, 385 area. All right. So what happens is I make my plan based off what I know in the pre-market. All right. The stock's not gapped up that much. I don't love that, but it does have a dilution pig and a history of paint stripes, right? So what can we do? So first plan, guys. The stock's down here. I put my fibs on. All right. I know now that the gap fill level is at 360. Remember, look, we want to forgot about the gap fill level. Remember, we had the gap to fill right here, right? So I usually mark these off in a different color so you know when you're looking at the 1 minute chart that they're not the regular pivot. They're a gap fill pivot. So I'll mark it in a different color. All right. So now, this first pivot is just too low down for me. It's just too far, too low down. Okay. I'm not going to trade it right there unless this thing's gapped up 100%. It gives me a sick trigger. If it's only gapped up 60%, I'm not going to trade here. I prefer it to be up in lower high position, right? But I also know we have pivots up here and up here. So if the next pivot is here and the next pivot is here, we have only one place to trade off of that could be important. And that's this gap fill pivot. It's close to the 50 fib. We could use that as confluence, right? But guys, the stock goes up, it pulls back, it goes up. There's no real trigger here. It doesn't give you a stuffed candle at the gap fill. It just blows right through it, right? It blows right through it. And guys, if you took it right here saying like this is a trigger, you're too far. It's just, when it comes to gap fills, I want to be exactly filling the gap or a little over it even. So because this is just too far down. If you end up, guys, if you're like, say you're drawing a trend break here or something, and you're saying, oh, it pushed up towards the gap fill, but you're literally like, it's just, where are you risking off right here? If you short 245, risking this high, you're still below the pivot. So maybe you want to use that. I told you guys in pre-market, I wanted to use $3. So I wanted to be up into the 50 fib into this gap fill and give me a good trigger that I could risk out 3. Instead, it didn't push up high enough. It pulled back and just blows through. Right here, it just blows through the gap fill. There's no trigger. Blows right through lower high position. Now I've seen this price action. Now I don't even want to trade it. We already ripped through lower high position. We get a quick pullback. Boom, and it squeezes back up. At this point, I'm like, after yesterday, I don't even want to take this friggin' lower high right here because it didn't even drop that much. It just quick whip back. You see these spikes. So what did I do? I put my trend break. Once you start to see, look at perfect trend right here. The first trigger is right here because now we came up 1 penny away from 380. One penny away from this ultimate high pivot, or 2 pennies, whatever it was, 382. Now we're waiting for a real trigger. We have a trend break trigger, and then it tries to reclaim, and then a stuff trigger. So trend break right here, and then a stuff trigger right here. You can enter on, and then obviously the best setup is the lower high on, look at volume over here, guys, almost 4 million. Volume over here, 1 million. So we have a 50% or greater volume reduction. We want to be shorting up into lower high position, which we got right here. Not only that, we got a fake breakout over this high. We got a fake breakout over this high right here into lower high position. It fell back below. That's a short. Or you can just short as it goes into lower high position, risking this high. Or you can wait for the fake breakout and put your stop over the trigger. But I don't really recommend doing that. I think it's better to use this. It's always better to use the true high as your stop because that's the last place it failed. And at the same time as this is going on, guys, I'm looking at the 10-minute chart with the pre-market data off. Pre-market data off, and we're way up here. Let me delete all this crap again. We're way up here doing this, and we're so far off the 10-minute 21 that it's still a great short. So if the 10-minute 21 is slowly caught up to right here, now I'm like, do I want to hit this low high? We're bouncing off the 10-minute 21. But I know stocks love to come back to the 10-minute EMAs. So that is where I will take the fib bounce and normally target here and here, but this dropped so fast I just got all out down here on an offering. So that's pretty much the gist of it. Just, you know, you have to be thinking, guys, risk reward, right? It doesn't matter if the stock, always think, where am I risking off? Where am I risking off? The stock maybe came close to the gap fill, but where are you risking off, right? Where are you risking off? You're going to take this trade and just risk right here? That's crazy. Too far down. You know, especially when all this volume starting to come in, just, you know, don't be that eager to jump on stocks that the true place they feel last is this far away. If you're going to say, I'm going to alter my plan to trade it off the gap fill, then you want to see a damn good trigger there. A damn good trigger there. Not just some, maybe a trigger, maybe not a trigger, right? So that's what I'm talking about. All right. Thank you.